This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The world's economy is expanding in most places, despite some hot pressures. The week ahead will crescendo on Wednesday with the RBNZ monetary policy review and OCR decision, but there'll be a lot else going on too. India and South Korea will also have rate decisions this week. In the US, they get their September CPI result along with PPI data, and Japan will release sentiment survey updates along with Australia. The EU will release retail sales data, and factory order updates will come from Germany. But first we should note that today is the final day of the Chinese Mid-Autumn Festival, and normal work will restart there tomorrow. And in Australia, most of their eastern states will be on holiday today, except Victoria. New South Wales and Victoria also have moved on to summertime, so they're back 2 hours behind us. But the big news over the weekend was the eye-catching headline rise in US non-farm payrolls of 254,000, almost double the expected 130,000 rise. And as regular listeners know, we also checked the actual change, which was almost double that, at 460,000. All very impressive. There are now 162 million people employed in their civilian labour force. There is momentum here, and the impact of 460,000 more paid workers will be widespread and impact the whole global economy. Both their unemployment rate at 4.1% and the number of unemployed people at 6.8 million changed little in September. And the East Coast Gulf port strike has been settled, so that is no longer an economic irritant. This result is of outsized change and had an impact on the financial markets. While the equity markets didn't react, the bond markets did, juicing up benchmark US Treasury yields noticeably. The US dollar rose sharply too. And the US Fed may well be restrained by this labour market surge. Cutting rates into a fast-rising economy would be inflationary, and they only have just gotten things back on an even keel. By any measure, they've achieved a soft landing. They seem set up for a solid 2025 expansion, provided their economic management stays professional, of course. The latest third quarter estimate of US economic activity is a growth of 2.5%, which take their nominal GDP to $29.4 trillion US dollars, and 1.4 trillion more than a year ago. This is also impressive. Given today's labour market surge, there are now upside risks to these estimates. And we should note that all this is going on while the US Federal Reserve shrinks its balance sheet. It is now down to just over $7 trillion, a $76 billion drop in a month, a $900 billion drop in a year, and almost $2 trillion lower since the 2022 peak. Monetary policy resilience is being built back up. Yes, US federal debt held by the public is rising in dollar terms, but not as a proportion of overall economic activity. But a stock-to-flow ratio like this is a bit of a junk sideline stack. You'll hardly ever see that ratio in the commercial world. China may still be on holiday, and by all official accounts, travel-related activity is normal, but other accounts of their economy are still a worry. When they return tomorrow, we'll likely see the start of the rollout of their signalled fiscal bazooka. Singapore delivered good retail results for August, to be up 0.6% from a year ago, and almost all of that in the last month. And Vietnam surprised observers by releasing data that showed their economy grew by 7.4% in the third quarter of 2024, driven by exports, even though production was hit by a typhoon there. That is up from 7.1% in the second quarter, and expectations that it would only expand by 5.5% in the third quarter. Along with India, they have wrestled the mantle from China of the fastest growing developing countries. More broadly, world food prices in September rose by much more than expected and across the board. In fact, it was the largest month-on-month increase since March 2022. Rising dairy prices were among the gainers, but not so much the meat prices. The US Treasury 10-year yield is now just on 3.97%, down 2 basis points from Saturday, but that's up 20 basis points from this time last week. And the price of gold will start today at $2,653 an ounce and up $4 from Saturday. Oil prices are down $1 at just on $74.50 a barrel in the US, while international Brent price is just on $78 a barrel. A week ago, though, these prices were $7 lower at $67.50 and $71.50 a barrel, respectively. And the Kiwi dollar starts today at 61.6 US cents and unchanged from Saturday, but that's a big 2-cent fall from a week ago. Against the Aussie, we're still at 90.6 Australian cents. Against the euro, we're down 10 basis points at 56.1 euro cents. That all means our trade-weighted index starts today at just under 69.7, unchanged from Saturday, but down 100 basis points from a week ago. And the Bitcoin price starts today at $62,760 and up 0.8 from Saturday. Volatility over the past 24 hours has been low at just under plus or minus 1%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.